Alright, hello and welcome to Camel Finance. I'm your boy Camel, and first of all, coming off the back of Thanksgiving, so happy Thanksgiving. Hope you all had a good time over in America, all of my American brothers and sisters. I thought this was a fantastic diagram from Root here that shows that the price of turkey is up from 28.21 in 2020 to 34.15 today, which is a 21% increase in the price of turkey due to CPI and food inflation. However, if you'd saved your money by dollar cost averaging into Bitcoin, then you would have actually saved 57% versus 2020. So therefore your your Thanksgiving turkey would only be just under $12 instead of 35. So I thought that was pretty interesting. It goes to show the power of dollar cost averaging into Bitcoin, particularly at the low levels that we're at now. Do you remember I made a video a couple of days ago where I was saying that if this rally were to unfold and if we were to get this melt-up scenario play out, it would be the most hated and the least understood, the most shorted, the most doubted rally of all time, because it doesn't make any sense against the macro backdrop. There's too many reasons to be bearish for the stock market to press on and make new highs, and this is why technical analysis is so important. And we are just seeing this over and over again. Certain bears, they're just saying things like the S&P refuses to go down, which is actually quite impressive. It's not impressive, it just doesn't make any sense. It's ludicrous, but you have to learn to read the charts. You have to learn to just take the market as it comes. You cannot determine which way the market's going to go. And right now the market's going up. A Bitcoin shop has been spotted in the capital of Austria. So this is adoption, and I'm sure we'll continue to see continued adoption. Over in the Netherlands, they're protesting against the Euro CBDC. Bitcoin is freedom money, and people are starting to work this out. People, of course, will work this out because the only other option is digital slavery. Meanwhile, it's official. Resetting digital currencies was discussed by Davos and the WEF, okay? So make no mistake, this is happening. They are going to reset these currencies and we are going to end up with CBDCs, so you better opt out and you better do it quickly. I've been talking for a while about not underestimating Bitcoin's ability to putting a massive candle and for sentiment to just reverse very, very suddenly and for Bitcoin and crypto to start to catch up to the stock market. Binance has allocated another $1 billion to its crypto recovery fund, making a total of $2 billion. So don't underestimate the ability for this whole FTX thing to just disappear overnight, okay? Now, I'm not saying it will, I don't know, but what I am saying is don't underestimate its ability to just shake off this bad news and enter a bull market. Today, this wallet address received $1 billion US from two of Binance's wallets, which is the same amount announced by Binance for its crypto recovery fund. Will we have an announcement soon? And this is exactly what I'm talking about. It will only take one announcement. One announcement is all it will take, and sentiment will reverse. Sentiment will shift on a dime, and we could enter this bull market for Bitcoin, which we know is overdue. My boy Z here puts it perfectly. Look, the S&P price is correct. Bitcoin is lagging. Zcash and Litecoin have smelt the coffee early. They are leading this pump. Bitcoin is likely going to catch up. It's only a matter of time before Bitcoin catches up, and we get this parabolic wick. This is 100% on the money, in my opinion. President Bukele from El Salvador has ordered the creation of a national Bitcoin office in El Salvador. So there you go, continued adoption. They are thriving from adopting this Bitcoin standard. Bitcoin fell in price, but that doesn't stop long-term holders that continue to load up. In fact, they increased their rate of stacking sats. And you can see here the long-term holder supply, which is the yellow line and the black one being the price, is making new highs and rather rapidly. If you are selling your Bitcoin down here, you're selling it to long-term holders that understand the network when you don't. This is just the reality of how markets work. Binance has released its proof of reserves system. Every single user can now verify the Bitcoin they own on Binance using a Merkle tree and have it verified by a third-party audit agency, says Binance. So this is likely the news that's going to fix this whole system. This is likely what's going to be put in place to stop the FTX blow up from happening again. People are going to be able to actually see the proof of reserves, to actually fully understand that the Bitcoin that they hold on an exchange is really backed there, and they're going to do this using the Merkle tree system. So every cloud has its silver lining. Miles has got my sort of thinking on this. Look, something like this seems wild, right? Seems absolutely ridiculous that we could just shoot up to 100K in a few months' time. But this is kind of what I expect to happen. The stock market is already nearing all-time heights. The Dow Jones, I'll get to the charts a bit later on, but the Dow Jones is only something like 7% off of its all-time high now. What would that look like for Bitcoin? We would be up in this $60,000 neighborhood, right? So again, I would just caution against being sure of yourself and being sure that we have to go lower or that we can't just suddenly snap and catch up with the stock market. Willy Woo pointed out the CVDD floor price is being tested. Willy Woo created this metric all the way back in 2019, and this is its first test since then. Of note, you can see that we only ever test this level at the absolute lows of the prior bear markets. So again, is this telling us that we may well have seen the lows for Bitcoin? This bear market, by the way, is now officially the heaviest oversold period and the second longest period of overselling. If you want to know where the Bitcoin price is going, you don't need to complicate things. You follow M2. As they expand the money supply, as the M2 supply grows, as they print money out of thin air, Bitcoin moves to hedge this risk. Whenever we get a spike in M2, Bitcoin outpaces it. Whenever we get a spike in M2, Bitcoin outpaces it. I've used this chart many times over the past year of having this channel, and I've used this chart to destroy the myth that Bitcoin is not an inflation hedge. People like to measure from the top to the bottom and say, yeah, well, look, it's down 85%. No. This is how you know it's an inflation hedge. Whenever they expand the money supply, Bitcoin goes parabolic. Bitcoin also tends to enter a bear market when they start to contract the M2 supply. When they stop printing, when they turn the printers off, that's when Bitcoin enters its bear market. You can see here, it's almost time to start spooling these printers up again. The S&P 500 and Bitcoin are currently showing price divergence. So which one is accurate? I know a lot of bears would like to say that the S&P is bound to roll over, it has to roll over, and therefore Bitcoin would be correct. But I am arguing that quite possibly the S&P is going to continue to press on and take out its new highs, and therefore Bitcoin's price is shortly going to reverse. It hasn't done it yet, but that is what I am expecting. We haven't seen this few green days in the markets worldwide since the great financial crisis. Let that sink in. So you can see here, when we're at these levels, marks the low for the bear market. Same is true back here, and now here we are again. A percentage of stocks above their 200 MA just broke out of resistance. New all-time highs are incoming for stocks. You can see that down the bottom, breakout retest, now looking for that resumption. This is lagging, and so is tech, so is the Nasdaq, and so is Bitcoin. But believe me, these are going to catch up. These are going to catch up, and they're going to do it sooner rather than later. This smart money indicator has peaked recently. In the past decade, such an occurrence has led to some exceptional returns in the market. Again, where is the bearish case? The bearish case solely exists in the media. But the Fed, bro, but recession, but this, but that. And yeah, I get it. I've said this before. It makes sense. But you have to look at the technicals. You have to look at the charts. And the charts are telling us we're going up. Japan continues to dump record amounts of treasuries. I've said this as well over and over again on this channel. There is no buyer for US treasuries. This is how we know the printer is coming back on. This is how we know that M2 chart I showed you earlier is going to spike again. There is no buyer for these US treasuries. There is no buyer for the monetized debt of the United States government. And therefore, they are going to have to print. The Fed is going to have to be the buyer of last resort with freshly printed money. Who is going to buy this US debt if all previous major buyers are also now net sellers? There's only one answer. The Fed is going to be forced to have to buy it, and it's going to have to do it with freshly printed money. Taking a look at the charts, the dollar continues this sort of dead cat bounce. This could end up forming a double bottom and wicking out of here for a bit, but I would think whatever happens, it's likely going to roll over and work its way down to this blue trend line. So that remains to be seen. Taking a look at the yields are telling the same kind of story, right? Dead cat bounce, maybe a bit of chop, but likely lower over the short term. Here's the 2-year yield looking to do this head and shoulders pattern I keep talking about. So is that what we're going to see? Again, that remains to be seen. Hopping into Geo continues to press up. So happy days, no complaints about that. Bitcoin's still refusing to recover this Wyckoff spring. So I'm just let me hop into the other chart and we'll measure the days at the moment. We're on day 17, so a half cycle low would be expected around day 30. Again, as I keep saying, all the while we're above this, then I would expect that we can have a good chance at moving up. But if we lose this white line here and this cycle low from back here, then we can expect the 12 to 14k region to come into play. Zcash looking for breakout retest and resumption. Can it do it? That remains to be seen. MATIC is again still doing a whole lot of nothing, still sideways. Still not interested in Ethereum until we can get this confirmation from Bitcoin. So I'll continue to monitor and update on this as appropriate. Gold, still kind of holding this gold long and the same of silver. So not much more to say about that, to be honest. Same is true of Apple, still pushing this trade that's going absolutely nowhere, but that's fine. Tesla is hinting that it might want to break out, probably want to be stricter with this, maybe take the wick. So that remains to be seen for now. Maybe if we can get a breakout retest resumption, we can have a second crack at Tesla. Same deal with Marathon and Riot as always, and MicroStrategy and Coinbase. You know the deal by now. If you don't, go back and watch a prior video. UKX, you can see here, continues. I mean, how many percentage points off the highs are we? We're under 3% from the highs in the UKX. This is exactly what I'm talking about. How can you be bearish when we're 3%, less than 3% off the highs? The VIX, you can see the VIX here continues to compress, okay? It does not speak to risk off whatsoever. The Dow Jones, again, I think we're only something like 7%, 7.5% off the highs for the Dow Jones. Again, this whole look of breakout, retest, and now resumption, difficult for me to be bearish at this point. Is a pullback at some point coming? Yes, but does it have to be a crash, and does it have to come all the way back down here? No, I don't think so. The Nasdaq, again, still above this big green level, so long and strong continue to push. The S&P 500, again, still pushing up. I think 41 to 4,300, as I've been saying over and over again, is more than expected. If this really is the cycle low and I got the count correct, then it would be reasonable to expect a drop into the cycle low into the new year. But could that look something like this? Yeah, I think so. I don't think it has to be very aggressive. I don't think it has to be this big rollover that makes everyone super, super bearish all over again. So that remains to be seen, but that's the analysis for now. If you found value here today, I'd appreciate it if you could drop a like on the video and subscribe if you're not already. Turn the notifications on if you want to see how I deal with these markets in real time as a pro swing trader. If you have anything to say, throw it down in the comments. In the meantime, enjoy the rest of your weekend. Take care from me. All the best. Cheers. Bye.